A new trading week is about to kick off right here at the New York Stock Exchange, and well, stocks just experienced a bit of a sour end to a seesaw trading week because last week the markets did indeed end in the red despite some strong earnings results, keeping the bulls optimistic. But if you're wondering what caused the slide, well, it was data and geopolitics. On the data front, the University of Michigan's preliminary consumer sentiment read for the month of February came in at 61.7, falling from 67.2 the previous month and missing expectations. Then there was inflation continuing to rise to a 40-year high, but a lot of the slide, especially on Friday, attached to a jump in oil prices that appeared to be tied to an increased concerns about Russia taking military action against Ukraine. With about 2 hours left to the trading day on Friday, U.S. National Security Advisor Jake Sullivan said at a White House briefing that there were signs of Russian escalation at the Ukraine border and that it's possible an invasion could take place during the Olympics, despite speculation to the contrary. Both the U.S. and the U.K. have called for their citizens to leave Ukraine as soon as possible. But now it's a new week. Will we see a return of the bulls, or will we see a continuation of the slide and a continuation of the escalation at the Ukrainian border? Let's now take a look to see what will likely happen with the week ahead. Now, we begin on Monday, and it's off to a bit of a slow start, kicking off here in the United States with both 3- and 6-month bill auctions. But Tuesday we see a pickup in action, and that begins in Japan, with that nation's fourth quarter preliminary GDP and industrial production figures both due out. Preliminary fourth quarter Japanese GDP expected at 1.4%, industrial production 2.7%. Meanwhile, in the United Kingdom, we have the 3M ILO unemployment rate due out. Expectations call for a read of 4.1%, unchanged, and keeping in Europe, preliminary Eurozone fourth quarter GDP due, with expectations calling for a read of 0.3% quarter over quarter and 4.6% year over year. And that's not all. We have ZEW economic sentiment due out of both the EU and Germany. February German economic sentiment expected at 53.5. Meanwhile, Wednesday, it's another busy day, and we first find ourselves in China with both January consumer prices and producer prices called out for that nation. Expectations call for a read of 0.5% month over month and 1% year over year. Meanwhile, in the United Kingdom, we'll have a bit of the same. We'll have the release of January consumer, producer, and retail prices figures, while right here in the United States, January retail sales await. Expectations call for a read of 1.6%, and we'll also see the release of the FOMC minutes. Now, Thursday kicks off down under with Australia's employment change report, as well as the unemployment rate for that nation. Expectations for the January unemployment rate in Australia unchanged, 4.2%. While here in the United States, we have the normal weekly jobless claims figures, but we will also see the release of housing starts. January U.S. housing starts expected at 1.702 million. And then on Friday, it's all about Europe. First in the EU, preliminary February consumer confidence awaits out of the Eurozone. Expectations call for a read of 6.12 million, while in the United Kingdom, retail sales numbers, they're due out. Expectations call for a read of 0.6%. And before signing off, remember to keep following more earnings reports and more geopolitical updates, especially on the Ukrainian border, as they have been major movers for the markets as of late. And until next week, live from the New York Stock Exchange, I'm James Sweeney, reporting for ICM.